Good afternoon. Good afternoon, everyone. We're just tweeting out what we're doing here. I'm going to be back to answer any questions here in a moment. Just give us a moment and welcome YouTube. And we'll say good afternoon to the folks at YouTube. I am Bagadan. This is Stock Market Caddy. It is May 2nd, May 2nd at about 11:45 in the morning. And we're just giving you a view of the markets. They've turned a little choppy here, middle of the day. And it's really your opportunity if you want to take advantage of it to ask us any trading questions you might have, who we are, what we're about, what are the tools we're doing. And um, we started the week with a beginning balance of $25,000 on Sunday night at 6 p.m. And we set out to do something that we don't encourage, don't suggest. One of the biggest mistakes people can make is to over leverage a small account, and getting sized appropriately for margin levels and trading futures is very, very important. We discussed that at length during the Q school. And when you are trading a mini contract, for instance, on the NQ contract, if you are trading that outside the hours of 9 a.m. to 4 p.m., in other words, taking it overnight, the necessary required capital, the original margin, is about 19,000. So that's even a $25,000 account, even that is pretty narrow, however, when we're trading, it's very mechanical, it's very robotic, and the profits are tight and the stops are tight, relatively tight. However, during the day from 9 a.m. to 4 p.m., the margin level drops from 19,000 to 1,900. So when you're at 1,900, a $25,000 account is more than adequate to be trading one mini contract. This week we did something that we don't ordinarily do, and that was to push and press the margin levels. But to trade in the way we trade mechanically, robotically. We're trading in the same fashion. The margin really won't, make a difference. But the drawdowns, when you increase the margin, the drawdowns will be bigger, the profits will be bigger, and you've got to make sure that that your game has been honed and what you're doing is solid, and you're solid as well, because the numbers are going to be bigger. Yesterday we had some fluctuations on the account. We started at 25,000. The account at one point was I'm going to say 33, 34, and then we fell back, and we actually fell all the way back. The account was down about 20 yesterday. Now, the margin that we were trading 5 minis. The margin that we were using was $9,500. So we still had plenty intraday. We still had plenty of capital, but it still was putting, we're using 50% of the account value, and so that's rich. But we're mechanical, we're machined, and we opted to do that, and got a beautiful move yesterday, cleaned up the drawdown, and moved the account up some $19,000 to $20,000. Now we have fallen back. It's Thursday. We're not going to continue that. And that isn't something we're going to do every day or every week. But we did want to discuss it because we got some questions about about the size of the profits yesterday. But we have fallen back into our comfortable slippers in terms of margin levels, and we're trading at this moment in time, where the machine is trading one mini contract that's following a specific program that we've set up, and she's $388 profitable since midnight, and we're letting it run, right? So just wanted to address that. Jar opportunity though to visit the website And if you've got any questions for us, you want us to plug in any of your tool or any of your markets or stocks or into any of our tools, I'm happy to do that. Otherwise, I'm going to shut up and let you watch. We're not suggesting that you try to take any of these trades off of YouTube. You're on a 50, 60-second delay. You're not schooled in it. I wouldn't want anyone to get hurt. We're doing these little YouTube sessions, sometimes a little bit longer. Sometimes at night we'll let them run for hours, but today we're gonna be here for about an hour to answer your questions, and then we gotta get refocused and need the computer time. So, all right. So if you got any questions on anything, if we were also asked, like, why do you trade futures? What are futures? Futures trade just like a stock. There's a bid and the ask. They're leveraged. They're leveraged. They're highly liquid. What do we mean by highly liquid? The difference between the bid and the ask is very, very tight, right? If you look at something like Google or Tesla, the difference between the bid and the ask could be very, very wide. We also don't have to deal with the Greeks, time decay, and all the considerations that we have to deal with when it comes to options, and we do trade options. And you do need to be educated about those things, because when you're trading options, but we're not. And we can't intervene, right? We could come in here, and I'm going to take a quick peek at our chart, and maybe we do a little bit of maintenance on here. Whoops, I'm sorry. Let me get a view on this. Yeah, no, I don't think there's any reason to take this off right now. Swing machine is also long, happens to be, yeah, it's looking pretty good. So we're going to let that run. But we could intervene, right? You could, right? And if we took the $450, we're up $1,000. 24 trading days in a month. Take Friday off. There's 20. Give yourself just 20 days. 20 days. If you make $100 a day, it's $2,000. 200, it's 4,000. Do you have the patience, the discipline to come in every day and just make the 200? Or do you got to try to make 20,000? We've been doing this a long time. So I'm not suggesting anyone do what you would have seen us do yesterday. We've been doing this a while. We know what we're capable of. We also know what the market's capable of. So it's really important to stay within your skill set, right? Maybe if you're golfing, maybe you don't quite have the game yet to try to reach, that par five in two, that sort of thing, right? Maybe, you wind up stretching and doing something like that, and then all of a sudden you destroy a round, or you destroy your account. Not a good idea. So you got to stay patient, stay disciplined, stay mechanical. The markets, the beautiful thing is, if COVID has shown us anything, knock on wood, COVID, for whatever it was, wreaked havoc around the world. They closed all kinds of businesses. They closed churches, places of worship. They didn't close the liquor stores. They didn't close the pot shops, which, kind of tells you, but they closed much of everything else. But the other thing they didn't close, though, they didn't close the markets. Whatever side of the aisle you're on, politically, and it doesn't matter to me. I'm just we don't get into it here, because it really doesn't matter. They all the Pauls here, wherever, they love to get into the markets. So the markets are always here. They're not going away. They're going to be here in a couple of months. They're going to be here in a couple of years. They're going to be here forever. And it's a beautiful thing. Are they rigged and corrupted? And yeah, maybe around the edges, but they're probably the last bastion of freedom, in some respects, that we have. So it's a beautiful thing. And if you're here trading the Nasdaq futures or the S&P futures, I like to think of that guy. There's some billionaire and he's sitting in his yacht off of Monte Carlo or off of Cannes, and his trophy girlfriends are jumping off the back of the boat. And where's he? He's down in the bowels of that boat with a bunch of computer screens trading the exact same markets we're trading. Isn't that a beautiful thing? And you can take a couple of bucks right out of his pocket if you're good. Don't listen. Don't listen to the Madison Avenue. You can't do this. Don't listen. Anybody tell you that you can't do something, um, you you might want to give yourself some distance from that person. A lot of times people remember the scene from the movie. I forget what the name of that movie was with the was the little basketball scene. I forget the name of that. He was talking to his son, and the father says to the son, he says, a lot of times, son, people tell you can't do something because they can't do it. And that therefore they don't want you to do it. If you got any of those people in your life, um, keep them, I was going to say at arm's length. You better keep them at driver length, the length of a driver. Keep them away from you and away from your kids too. You're never too young. You're never too old. And I'm here to tell you, you can do this. You can, but it isn't meant for everyone. I know that. So I'm not saying that everybody can. They can at least try, but it is within your reach. You can do it. The technology is here today. The liquidity is here today. It's unbelievable. It's unbelievable, what is possible. We demonstrate it, we're not out to demonstrate it. We're out to make ourselves available to answer your questions. But in doing what we're showing you, our members are here. They have a Zoom. They can patch in, anytime. We have a live Zoom running 24/7. Okay, and they're here. Not all of them, but many of them. We're going to go in and um, I tell you what, we're going to let this. It's only the middle of the day. We got plenty of time. Um, Now imagine for a moment um, that you've been trading for 20 days and you didn't make $100 a day. You made 1,000, 20 grand in a month. Would that change? It wouldn't be enough to change your life, but it might be enough to change your trading life. Hmm. But it is a business. Trading is a business. We're here to help you become aware of the things that you need to be aware of, maybe some things that you don't, and you've got to set yourself up as a business. If you're just popping into your office, willy-nilly, oh, I think I'm going to throw some trades on, well, good luck. Whatever it is you're trading. Haphazard effort is going to get haphazard results in almost anything we do, right? You don't have to be here every minute of every day. You don't have to trade all day long. And the other piece is, if you're paying attention to all this Federal Reserve shit and all this other BS and all this other macroeconomic babble, just, if you want to read about it and listen about it, because it's, I don't know, it's interesting. It's like reading about sports. That's got nothing to do with, the game at hand. Really doesn't. Those people that are promoting that stuff, They're trying to promote themselves as being the smartest guy in the room and having all of the answers and being smarter than you. And why? They want you to send them assets so they can manage. We don't manage anyone's money. I am not the smartest guy in the room. In fact, I would arm wrestle you for the right to be and say, I'm not a dumb person, but I'm going to say that I am the most ignorant person in these markets today. Every day. And the machine just took a trade. That's a beautiful thing. If we stop trading right here, right now, which we're not, we're going to go through, we're going to stay with you until about 1 o'clock, 9:36. You can start or you can stop. Up to you. And if anyone has any questions on what it is you're seeing, what we're doing, don't hesitate. We're not going to bend your ear all, during the middle part of the day here, but markets kind of doing me here a little bit. Um, we have fallen back. Now, yesterday we were doing something specific and we were using $9,500 of margin on a small account. That's it was about 50%, 40 to 50% of the account. That's not recommended, not suggested, but we're falling back to a margin use of just $1,900 and very comfortable. Plenty, plenty of capital to do what we're doing, and this is all robotic. Um, Today's bounty is going to be much smaller than what we had yesterday on account of the margin, and that's just fine. Since midnight, we've posted $936.40, fully robotic. Okay, everyone. Again, if you have any questions, just let us know, right? I'm just periodically just taking a look at YouTube, so I'm not going to bend anybody's ear. I bet you then we have one person there, one person. I bet you it's Tina. Tina, eventually we're going to get, I know you want to join. We'd love to have you. And Tina's been with us and watching on YouTube for a long time. And she's probably there right now. And she, we already know, we can tell she's got a passion for the market. She's there all the time. Hope you're getting it done, Tina. This little strategy is doing just fine right now, right? I haven't made one decision. I'm not tethered. I'm not tethered to the machine. I'm not listening. I don't have CNBC on. I'm not struggling to read candles. I don't have stochastics. I'm not using moving averages. I'm not using any of that crap. No, I don't. No, it is hard enough. I will say this, and it's part of it. We're on Twitter and we're aware of the real world, and sometimes it's the real world is not so great, right? It can be, you have to kind of filter that out a little bit. Um, but but we try not to, we segregate that from any of our trading, right? Um, I am happy to see though that one of the little snots that was organizing some protests at the University of South Florida, she was going to graduate on Saturday, and they expelled her little ass. So that's good. And our governor is like, we're not going to have it. We're not going to have it on these campuses, at least the state schools. So, but it's good to see. I can't, I digress a little bit, right? But we do see the headlines. We do see these, what you see. That's part of it. But we don't let it filter in. Don't let it, you know, take away from anything. Um, I've always said that some of these universities are just madrasas of the left. Some of the most disaffected, so-called professors of God knows what. What a big business that is. Oh my goodness. But it's always been the case. It was the case when I was on campus too. And many, many moons ago. They were there then. Hmm. Let us know. Any questions on trading? Members, if you have any questions about the program that's running and you want the very specific settings, don't hesitate. We've already mentioned them, but don't folks are coming and going, so always know that. We'll always, for folks on YouTube, anytime any of our members see us running anything, they have it. We'll tell them exact settings of what we're running, what we're doing. They can choose to do it. They can choose, to do, set it up the way they want to set it up. Not a problem at all. Now, there is going to come a time. Is it is it this week? Is it tomorrow? I don't know. But it's got a little hint of it. And that is they love to, when the market has been beaten down, they love to buy these zero DTEs, like 2, 3 days, 0 days to expiration Friday, usually on a Friday. So they usually calls, forcing the broker dealers to buy this crap. It's been a great game. We've been aware of it for a long time, long before, became public. The fact that it's become public tells me that it's probably coming, usually things are coming to an end. One of these times on a Friday, they're going to pull the plug and the markets are going to slam down as we get a gamma reversal. It's going to slam. And And then all the noise producers of CNN and CNBC, they're all going to go, come up with a story. And it's going to probably be tied to nothing. And people are going to react on a Monday, Tuesday very poorly going into the weekend. And we're going to have what appears to be a little mini crash, and they'll attach it to something. It won't, from our point of view, it won't be anything other than the markets are hugely extended. They're out on leverage, and somebody is sawing away on the limb, and the limb is about to break in our view. We're not talking about a market crash down to zero or anything of the sort. What we're saying is that these markets are just very extended, and we're thinking, a 10, 20, 30% correction is in the offering. Not saying it's going to be tomorrow, not saying it's going to be next week, but we've been warning and letting our members know since the ES was up around, it was 250 points higher. So if you're in here buying off of a candle or something, you could get hurt. Any questions, let us know about the markets. We do trade options, right? We do. We generally trade options, though. We will, if we're using our tools, we had a member talking about using one of our tools on an hourly, and he got options for Friday. Totally fine. He knows what he's doing. He knows where the tool is. He's got the right interval. He's using an hourly. One of the things that we'll do is if it's Monday and Tuesday, we will sometimes do the same thing. If it's Wednesday or Thursday, as it is today, then we won't get the option for tomorrow. We might get the option for Friday next week. If we're placing a larger option trade, larger being with capital, we're looking for a bigger move, then we will generally go 35 to 45 days. And we have other tools that we're using there. And we're looking at not an hourly signal, but a daily signal. And those signals are going to be less frequent, but we got very specific tools to keep us active and keep moving. Really important with options, really important with trading to keep moving. You can take breaks, certainly, and always a good idea to take breaks, but we also think it's a good idea to, keep swimming. All right. All right. Any questions, let us know. And strategy's doing just fine. If the account, no, I can see it in the corner of my eye. Does the account get itself to 50,000, which would be a double? We take a $25,000 account on Sunday at 6 p.m. and take it to 50,000. Register at the CME. Compete against us. I'd love for you to do it. We've registered at Stock Market Caddy. We're in there. It won't be next week. It's the week after. We're gonna, there'll be about 2,000 to 3,000 people or maybe some small hedge funds in there. And we've done pretty well. We're out to be in the top 3 or 4. We'll see. Okay, so the machine just took ourselves a little profit. We could go up there and scalp that $100 if we wanted to, right? We're not going to do that. The machine has now made for us $1,519 since midnight. I have not made one decision to enter or exit. We're now up to 225. That fast. A $10 drawdown, now up $200. Could we go up and take that money? We could. We're using $1,900 in margin. What is the percent return if we took $200? 20%. No, excuse me, 10%, 10%. But we don't keep score on percentage because it's crazy, right? We're using leverage. We keep score using profit factor. And I'll tell you what our profit factor is in a moment. If you have any questions, let us know. If you want to see anything, I don't, it's up to you guys. How many hundreds of thousands of people are watching CNBC? Can you imagine? And we have Tina. Thank you, Tina. Or maybe not. I'm not sure. But we only got a couple of people. That's all right. We're not trying to reach the masses. We're not. The masses can't do this. No, no. The masses were in Detroit painting their faces and watching the NFL draft. That's what the masses are doing. The masses are on college campuses. That's what they're doing. That's good. We need them to be doing that. We don't want everybody doing this. Just us. Just you. Once again, if you have any questions as you're passing by on YouTube, don't hesitate. We're here. We're watching out of the corner of our eye. Our beginning balance on Sunday night this week was, as it is normally, 25,000. We used in preparation for some other trading that we're preparing for. We used a little bit more margin on Monday and Tuesday than normal. We used $9,500 of margin. Ordinarily, we're just using 1,900, and we're back to using just 1,900. Yesterday was a huge day, and it's been turned out to be a beautiful week. The machine, I don't know if you heard it, just triggered. All the trading that you're seeing in the upper left-hand corner up over here is totally robotic. We've been running a program since midnight, and she is deposited $1,666 and look at that. Ooh, 666. I don't like that. In our account, and fully robotic. I haven't made a single decision to go in or out. I haven't made a decision to, take a profit or stop loss. The machine has totally done it. And the margin that we've used is $1,900. So I'll let you do the math. If we only use 1,900 and we're up 1,600, what is our percentage return? It's crazy. What you really want to know, you don't want to be patting yourself on the back on percentage return, whether you're trading futures or anything, including even options. What you want to know is, what is your profit factor? And let's go get it. Let's find out. That's going to tell us how good our trading, has been. Bear with me here. Let me generate this. So our profit factor is narrow, really. So, before we start patting ourselves on the back, it's only 1.2. We made $1.20 for every dollar we've expended. So that's okay, but the machine is doing it. If I was having to put these orders in and grind on them, I'd be worn out. I'd be stressed out. I'd be frustrated. That's pretty narrow, but a machine is doing it. So it's okay. It's fine as long as we're making money. And the strategy is telling us, what does the strategy is telling us that over the last 2 weeks, our profit factor should be, I think, about 1.4. So we're running a little bit down. Notice the market's starting to sell down, right? But if you're trading red and green candles, that's not going to work. Good luck with that, but that's a hard way to go. Very hard. Not a good idea. And I think we've scared everybody away. There's nobody in YouTube land. It's beautiful. It's actually, it's good. Club members, it's a small private club. It's a good thing. Mm. Now, for our members, what I'm going to do is I want to go in, and we have running in parallel the same program with optimized profit targets, right? So let's see what we've done. Whoops. Let's look at that. Do you see that? Um, so 4,000. So we've only done 1666. The machine has done 4,051 trades, 41% profitable, and a profit factor of 1.62. So probably best to run with profit targets. I'm not using a stop loss right now. I don't think it's going to be necessary, guys. I think the big difference is going to be that, that setting, what we're using. We are not using a time, remember? Yep. All right. YouTube, any questions? Let us know. It's a beautiful thing. We got about 30 minutes together, so I'm happy to answer any questions. Good to see you, IL. Just wanted to say hello. I just see you pop in. IL, just to let you know now, you saw over the last couple of days, we were using we used at one point $9,500 in margin yesterday. And that is not normal, right? And not something that we suggest. And we are on YouTube right now. So we're mentioning this and we just want to make sure that everyone understands. $9,500 would have been about 40 to 50% of our account value. That's very high. I'm not comfortable with that normally. We were doing something specific. We did what we did yesterday, though, and we captured the profits. We had a little bit of a draw. The performance, the performance was in line with what we normally do, right? We had a profit factor. I want to say, what was it? I think it was about 2, maybe 1.8, but in line. But we had a little draw, which you have to be prepared visually to see. And then we got our profits. We got ourselves squared away. That was intraday margin. We're now back. There's no reason to continue that, and we're right back using our comfortable margin of 1900. We're running IL. Let me tell you exactly. I'm going to send you in a chat what we're running. Hey IL, good to see you. I want you to see this. Was thinking of you. So I've already told everybody in the room. Let me send this to everybody in our Zoom room. We are running. This is what I was shadowing yesterday. I liked it. I really did. We are running. And we are running engine. No, right now, no stops or profit targets. However, we mentioned this, in parallel to this, we optimized a profit target. And the machine, the side that's running with profit targets has done twice this amount since last night. It's done about $4,000 or $5,000. Also, I did share this with everybody. I'm rethinking on something like this, that we might want to be optimizing, not necessarily the settings, maybe so, but in particular the profit target, maybe much more frequently. If you've been doing it every few days or once a week, we might want to be doing that every day. And we'd like to build in some optimization tools, that can make adjustments, intraday. But and the reason why I'm saying that now is I've been listening to a lot of these AI podcasters and stuff, talking about how they're building out the AI, and they don't use the word optimization. I'm trying to think of the word they use. I was thinking of it earlier, and I can't. It eludes me at the moment. I will get the word. They have a word for it, and their programs, that AI is, think of it in terms of optimization, is doing that constantly, and that's why it keeps learning from itself. It's really is machine learning, and I'm thinking that we should be, because we have the capacity to do it. And IL, if you think about this, and this is for everyone, is if you're optimizing the profit target every day, in the volatility over the last week or two is what it is, then it's going to capture that. And if it widens, then it's going to widen. If it narrows, it's going to narrow. If it gets on one side or the other, and we're doing both the long and the short side, right? So just a little FYI. But I think this is what we're going to be running I'm going to try to shadow this at the CME challenge. And maybe, this thing could be bigger run from 500 to 800 on that setting. But I think, we take the CME challenge, they give us 100,000. We take it from 100,000 to 200,000. I think we win. This is incredibly scalpable, right? I mean, we've been watching this. Overnight it did have a draw, but it worked that draw off. So I think it's probably best to be run during, you know, early morning through the normal session hours. I probably wouldn't run it into the evening, into where it could be just a chop fest. Where else can you have so much fun? Honest to God. Oh my goodness. I don't get it. You know what? I think back to when we started, there was nobody, and there was nobody doing what we're doing. There isn't. Maybe I don't know. If there is, you let me know. But I don't see it. I see them all doing what they're all doing the same thing. You know, moving averages, and then you got the macro babble. How about the lady? What is her name? She's one of the Fed sniffers, like a jock sniffer. That's a terrible phrase, um, but they just want to follow the Fed, um, and which is an exercise in futility. Um, um, it's a great game. The great game. I think if we get ourselves a double here and we get this account to 50,000, I think we'll shut down for the week. And that is the model. That is what we want to do CME week. That's exactly what we want to do. Here in the States, they're really they're talking about the inflation and they're raising the minimum wage out in California. They said the cost of grabbing a bite to eat at a quick service restaurant is rising faster than the cost of eating at home. God forbid. The pinch on consumers' wallets seems to be showing at Starbucks, KFC, and Pizza Hut, three very fine dining establishments. Um, I think I've been in Starbucks once or twice. I bought water overpriced. KFC, I haven't been in that since high school. And Pizza Hut, I haven't been in that since college. Announced declining same-store sales in the first quarter of this year. The long-awaited consumer pullback, as economists put it, is finally here. Well, buckle up because it probably is. And we got short-term interest rates at basically 5%. Um, it's not going to work. It the ability to buy a car, it's just so they got them at 5%. If you just, step back, please don't let me influence anyone's trading intraday. It means nothing. It means nothing for, next month or anything. You just don't know when the impact comes, but it's coming. And it's just, and they haven't really been able to quell the inflation, even with short-term rates at 5. We're going to go to 5.5. We're going to go to 6. We're going to go to 7. You know, what's that going to do? Now for the markets, please don't fret. We're not chasing the highs. We're not chasing the lows. We're trading the volatility. And the volatility going forward through this summer, into the fall, into next year is going to be off the charts, which means trading is going to be phenomenal. Phenomenal. I'm like, um, Phenomenal. Oh, excellent. This is IL. Um, let me just let's see. I'm just gonna, no, I can't. Yeah, I'd bring it into view, but can I do that? Let's see. Maybe I can. I want to, no, I can't. Because I disclosed something else. So I'm just going to read from IL. IL is one of our annual members. He wants everyone to know, which I thank you, IL. IL has, I have a profit factor of 3.42 for the week. I think I'm done for the week. All the trading on gold. Beautiful. Yes, that's great. That means IL made $3.42 for every dollar he put at risk. And it is Thursday at 1 o'clock. I would quit. I would quit. Um, and what we find is so you don't run the risk of bogeying the last hole or falling down on the last run of the ski slope. And that's the only thing you remember. You go into the weekend, you go into your Friday, you go into the weekend feeling really, really good, really, really confident, and in eager to get going next week. I'm not talking at IL. IL knows this, but for the benefit of everyone else, and you really, and we do, that's what we want to do, and we're eager to get going. But myself here, I usually sit on my hands on Monday mornings, let the market open up, let everybody else, get crazy. And but that is awesome, IL. Really, really good stuff, and very, very good. Thanks for sharing. Now, let me get a profit factor on this strategy, right? So you're looking at the money and saying, well, the money's good, but the profit factor on this strategy is narrow. I think it would have done better if we didn't start it so early, but let me just see where it is now. Okay, it's still at 1.25, right? Now, if I was having to put in all these trades since midnight, I'd be grinding. I'd 54 of them, 54 decisions to go in or out. That's crazy. I can't do that. I don't want to do that all night. And percent profitable, 42%. That means I'd be losing about 6 out of 10. And I got a profit factor of 1.25. I'd be very tired. I'd be really, it'd be a hard way to go. But I didn't make any of those decisions. The machine made them all. And it's just great. It's beautiful. Well, we only have 5 minutes left, and I think we had 16 views, which I'm not sure how many people. It may have only been a handful, a couple of people. So I don't know. But that's okay. We're going to keep doing what we do and creating some awareness. I know there's a lot of traders out there, but I guess, they're doing what they're doing. And if you are out there and you come by this and hear this later, if you're getting it done with whatever you're doing, keep doing it. If you're not, well, maybe want to stop, look, think around, look around. When we started this YouTube session, we were up, I think, $700. So we've done it in full view, live view. We're using $1,900 in margin. If we finish the day right now, we would have $2,400. And we use $1,900 to do that. It's a beautiful thing. Boom, machine just took it. We probably could have done a little better, but all right. Unless there's any other questions, we're going to let YouTube finish up in the next 5 minutes, unless it suddenly gets populated, but doesn't look it. Now, the other stocks that will start to show if there were in a recession at hand is the casino stocks, you'll start to see all the consumer and on the ETF world from, this is old school stuff, but the sectors that do well in a recession, utilities, staples, and healthcare, because they're looking just to park the money and they will still go down, but they won't go down as much. But if we go into recession, generally oil. So oil may have topped out. The economy may have only been able to take about $85. The oil will come down. The dollar will stay stubbornly high. They'll be in short supply. Technology will come in. The markets will come in, and but they are set up. Fortunately or unfortunately, they probably feel, the central planners, that they're in good position, and they probably are when you look at the interest rate. If I was mapping this out, if they can get themselves a 15 to 20% correction between now and the middle of July, maybe earlier, maybe by the beginning, they just had their May meeting. By the June meeting, if they can get a 20% correction in this market to get it come down and get a, impact the wealth effect, then maybe in June, maybe in July, they cut the rate. And when they do that, it's not going to help the economy to speak of. It won't. But the market will get a bit of a relief rally. And I think the market you will want to keep an eye on will be gold. For sure. But oil, unless there's some sort of risk, you never know with oil, there could be risk premium in that. But from a demand equation, probably going to be, I would think, kind of under pressure. That's what I'd be thinking, right? But I don't trade what I think. May rationalize some things a little bit, but I'm not gonna trade any of that. So I wouldn't suggest anybody else do that either. You can trade what you think if you want, but I try not to. All right, we're gonna shut down YouTube, and it's gonna be just us, boys and girls. For those that came by, we want to say thank you, and we wish you the best.